Good morning, everyone. Thank you for attending today's session. Um, I do apologize for being a little bit late today. I did get held up on a client conversation, which went longer than expected. So I'm really sorry about that. Um, but essentially, welcome to today's webinar. My name is Justin Ishac, Senior Wealth or Investment Manager here at Sharewise. We've got a very interesting one for you today. Obviously, earnings season out in the US is approaching very closely, so we're going to go through quite a few things. But before we get started, just a few of the boring general disclaimers that I'm sure you all love to hear. Okay, just share my screen. Lovely. So today's the 16th of July. Got a couple of weeks ahead before some of the major results are out. But anyway, so advice disclaimer. This is general advice only. Past performance is not a reliable indicator of future returns. Seek independent financial advice before investing. The information provided here today is purely for educational purposes. Okay, so again, thank you everybody for attending. My apologies for being a little bit late today. It's been quite a morning out there at the moment. So, we'll hopefully see some interesting moves in the market today, but let's get right into it. So just going to give a little bit of a market backdrop at the moment to what we're seeing out there in the market at the moment. Okay, and at the end of the call, at the end of the webinar, if you guys have any questions, you're more than welcome to ask away in the questions box in the webinar. I'd be happy to answer anything. And if you do want to talk one-on-one, happy to go through that as well. Let's get into it. So first of all, US indices, they're trading at highs at the moment, right? We've seen the NASDAQ surge significantly, S&P 500 serves, essentially run significantly as well, right? So what's happened recently is, the Fed is very data dependent, right? We all know that. But what we've noticed overnight is inflation's still cooling, effectively. Policy still remains a little restrictive. CPI, has come in lower than expected, which is good for markets. And if, this persists, rate cuts could really be on the table. Now, that's obviously a very positive for a wide number of things, including equities, but also, even cryptocurrency. And we're going to discuss that later today as well. Now, this is not advice to go and buy anything today, by the way. All of this is educational. Please keep that in mind. But I just thought I'd shed some light on some obvious movements that we're seeing in the market that I think is important to note, especially for investors. So nonetheless, markets may also be pricing in, that potential rate cut. Now, this could trigger a surge in risk on assets. Tech stocks could deliver, very strong earnings surprises. Obviously all being equal relative to the expectations that are out there from analysts or consensus. Okay, some historical sort of statements as well. I mean, July, August can be very volatile, and it does present some tactical opportunities as well, which I'd be happy to go through. And a lot of the tactical opportunities I go with through my private client group that I work with here at Sharewise. And if you do want to talk to me about that, we can discuss that at the end as well. Okay. Um, that being said, what do we expect, or what to expect for earnings this year, or this quarter, I should say? First of all, the S&P Q2 growth was, looking interesting. So there has been a bit of a forecast of about 8% year over year. According to FactSet consensus as of early July, this is what the figure is that they're expecting effectively. So this would mark probably the strongest year over year growth since Q1 of 22. And that's impressive. That's phenomenal. And we haven't even had a rate cut yet. And this is why I think it's interesting to see what happens in the next, obviously Fed policy meeting as well. So all eyes on the Fed, I think, as well, from that perspective. And majority of the upside we've seen has clearly been driven by the large caps of the index, like your Microsofts, your Metas of the world, etc. Right. So we'll run through all of that. We'll go through that, obviously in video as well, by the way. And I'm going to go through a bit of a walkthrough in a chart perspective of what we're seeing in the market as well, for everyone to sort of get a bit of a grip on what we're really looking at from a fundamental perspective and technical perspective as well. Okay. Yeah, so look, tactical approach, obviously tech leads at the moment. Expectations are also high as well from some perspectives, depending on the businesses that we're looking at. There is a bit of a sort of word out there around consumer strength divergence as it relates to staples versus discretionary consumer spending stocks. So obviously the point here that I've made is that the strength is in travel and in the luxury sectors at the moment. So this highlights a bit of margin pressure, maybe even some volume softness in staples due to cost of living concerns potentially as well, that I thought I'd note. But from that perspective, I think that's going to be an interesting, let's say, sector to watch as well, right? Stock spotlights that we're going to cover today. This is a couple of them, but there's going to be many more we're going to look at quickly, and I'm going to give a rundown on in terms of expectations, earnings, and overall results, right? So Tesla, nonetheless, I think most clients have been looking at Tesla saying, Justin, what's going on with Tesla? Oh, it's down. What are we doing? Look, it does tend to be very volatile during this period coming into earnings season. I'm a little bit of a contrarian when it comes to Tesla. Again, this is all general, right? Keep that in mind, and please make sure that you treat this as a very high risk stock, because it really is. If you believe in AI, if you believe in robotics, if you believe in full self-driving, why wouldn't you invest in Tesla? I'll put it that way. Because it's a little volatile. I mean, or because of Elon Musk, or I don't know what, but Elon Musk's relationship with Trump and all of that. Yeah, I get all that. I understand why, as Aussie investors, we look at this and we think, oh no, it's too much volatility. I just don't want to be there. But the reality is, who compares to Tesla? I mean, let's look at this logically. Most Americans want a Tesla experience. They don't want a BYD experience. And most Tesla, let's just say, fanatics are what they are. They're fanatics, right? So it's just, I don't believe this is a stock that's going to go to zero. I'll put it that way, right? But at the end of the day, we never know what markets do, right? However, I would argue this is a potential for a good move coming into earnings season. Okay. Bitcoin and Ethereum. We're going to discuss that as well, right? And this is a bit of a sideways sort of sector, or not a sideways sector, but a sector that not many in the industry really go into detail about. Today, I'm going to sort of touch on that because I think investors want to have a little bit more understanding on what's going on with crypto. And I really think a lot of investors just want more understanding to be more comfortable to look at this, right? And you can play this in a way where you're actually smart. You don't have to buy a cryptocurrency to get access or exposure to cryptocurrency, right? And, we can look at a whole, let's say, range of opportunities in the in the international equity markets to get access to cryptocurrency. And I'm going to run you through what we're seeing in Ethereum and Bitcoin. And I think what most investors will see is they wish they're going to have bought a long time ago again, right? And this is the same thing, just a different quarter, different month, different webinar. And investors keep on doing the wrong thing time and time again, and they get feared out of buying growth stocks. And they miss the returns, period. Common. if you fit in that category and you've got capital, you should be working with us, right? Bitcoin's breakout confirms institutional legitimacy. The next phase could be Ethereum catching up, right? Now, the rotation that we're seeing at the moment, it does look a lot like 2021, but with more of an institutional level. And this is what's incredibly fascinating at the moment with the crypto market at this stage. We're going to go through that. So just a bit of a breakdown on Q2 earnings season. As you can see, there's a few stocks that I've noted here. I just want to be sure that you guys can see the screen here. Would you mind just popping a Y for yes in the chat box? Just so I can make sure that you can see my screen here, the presentation slide, please. Yep. Thank you. Thank you, guys. Appreciate it. I just wanted to make sure that you could see the screen. It doesn't show me on my end for some reason. All right, lovely. So, yeah, so Amazon, right? Now, these are the estimated report dates. Just be, sure to double check all that. But I'll go through them anyway, and we'll double check it on my end here as well, right? So obviously, Amazon, AMZN is the ticker code. Estimated report date is August 1st. Q2 EPS estimates are about 0.86. They're estimating about a 26% growth estimate. The narrative focus is obviously AWS, so Amazon Web Services rebound, retail margins, and cost efficiency. The setup in short tactically is a long bias, right? If AWS growth exceeds greater than 15%. And it's possible post earnings for a breakout well above 200, right? So, or more, right? So the reality is it looks interesting here. And it is a staple in a lot of portfolios at the moment as well. Okay, so just be mindful that if they don't report according to what's expected, they could see a significant sell-off as well. So be careful with that, obviously, but Amazon looks interesting here. Google, GOOGL, right? So again, 30th of July, the estimate, the growth, obviously the narrative focus, as you can see, and the earnings beat. Likely, we could use, a straddle or a call spread into resistance, and we can discuss all that again, if you'd like to have a one-on-one conversation as well, right? NVIDIA, leading the charge behind chips and AI. All right. So if you want to play the AI space, you just can't go wrong with a staple in your portfolio through NVIDIA. Now, they report on the 14th of August. Obviously, they're more AI data center based, and it's going to be focused on the forward guidance. Okay. So I do believe that it's priced to perfection. The way we'd look at this is if you're holding it, you might want to consider taking a little bit of profit off the table potentially, and looking to buy the dip. We'll get a 2-day confirmation post earnings results, right? And obviously between now and the middle of August, we've got a lot of time. So anything could happen as well. So I'd just be very mindful of that. Some of it is already largely priced in, I'd argue, but at the same time, it could go higher. That's the way this stock moves. It's an interesting one. Meta, as you can see as well. The narrative here obviously is Reels, the monetization of Reels, CapEx discipline, and AI investment as well, or infrastructure. So again, might be good to take a look and see what it does post earnings result, because it's had a bit of a run, and if you're not holding it, obviously could be worth looking at. Just be mindful that it's had a significant rally, and you might want to consider, if you were to allocate anything anyway, and this is, again, is just general advice, is we'd look at just a minor positioning here, with the view of maybe seeing what it does post earnings, right, as a priority. Microsoft, as you can see, the narrative focus would be Azure, Copilot AI, and obviously enterprise budgets as well for AI, etc. So with Microsoft, I think this is a buy the rumor setup. So, you could consider going long into the report with a tight trailing stop or a tight stop loss, just below your entry, obviously. I mean, the percentage of how low will be up to you, but, I think it could be a good move given that they may report very well and they could see an outperformance in share price. Apple. Apple at the moment is range bound. It's really interesting. It's trading at the bottom end of the range though. And I think this could be probably one of the more, let's say, better risk to reward setups leading into earnings, which is interesting, right? So I'd really take a look at Apple with a potential view of buying pre-earnings. But if you want to stay safe, you wait till the earnings result and then you obviously look at buying. Right? And again, a trailing stock might be a good approach to this as well. Okay, but again, if you want to go through this in more detail, I'd be happy to walk you through it in a one-on-one session after we've discussed things in a bit more detail as well. Okay, so Apple could be very interesting as a setup here. Now, I'm going to also walk you through and show you actually some of the setups before we go into Bitcoin and Ethereum as well. So just let me share my trading screen. Bear with me. All right. So I'm just going to confirm that you can see this. Okay. Again, guys, can you just type a Y in the chat box or a yes to make sure that you can see the chart, please? Lovely. All right. Thank you very much. Beautiful. So here we go. So let's just take a look at, let's start off with, first one that comes to mind is NVIDIA, right? So NVIDIA, leading into the earnings results, you can see we've had a significant run post the earnings results at the end of May, okay? And I think we're likely to see a potential continuation. Obviously, sometimes leading into the report, it can get bought up and then sell off before the report. That could be an opportunity to buy before reports, but recently, as you can see as well, NVIDIA shares did climb overnight because of the resumption of the H20 AI chip sales in China. So, I think it's hard to say that they're a business to stay away from at the moment. You really can't say that. You'd be ignoring the facts. So, good quality company, but it is overbought, extremely so, and it is getting close to a lot of fair value estimates as well. So, just be mindful of that too, right? Okay, so the next one I think we'll take a look at, and again, sorry, actually, just before we move on from that, you could just eye out this trend as well, technically, and continue to sort of trade within the trend if you want to buy the dip sort of scenario with a tight stop somewhere below that level. But obviously, the way you could do this is if you're holding it, trade it, hold it in, and then maybe reduce some profits leading into the report, and maybe consider buying a dip scenario potentially as well. All right. So many ways to skin a cat. Obviously, you need to be mindful of what it does, price action and sentiment as well. Tesla. Tesla is interesting. If you take a look at Tesla here, I mean, it does look like a potential great setup here, right? If you look at it from a perspective of a downward trend, it does look like it's broken out of the downward trend right now, right? So you can see, if you've watched my webinars in the past, I've given a lot of indication on how to sort of view what happens with trend and structure. You can see here, higher high, higher low, higher high, okay? Then a drawback, then a lower high, and then a lower low, lower high, lower low, right? Now we've got a break up, and then a double bottom, and then a higher high, higher low, higher high, consolidation, consolidation, and then potentially bang again, right? So I'd argue this could be an excellent setup for, another leg up potentially. All right. So just keep mindful of that. Obviously, the full self-driving is launched. So that's interesting. And it's going to be interesting to see how this continues to play out for the year as well, right? So if you do want to sort of take a look at this, you could look at, a tight stop maybe of about, I really wouldn't do that, to be fair. I'd probably just watch this over the next few days, wait for some confirmation and then look at a buy if you're not in it right now. But, at the same time, it still looks like it could be a great setup, right? Bit of volatility, obviously, be mindful of that. Again, this is not advice to buy today or to buy right now, but advice to just keep an eye out, and it could be worth looking at. Okay? Really do like the way it's setting up, though. Okay, so that's Tesla. If we take a look at Apple, which I thought might be one of the main ones we could watch careful. There you go. I've already got that drawn up. So we've got a nice demand zone, which is broken out of at the moment. And again, you can see we've broken up from a downtrend already. Consolidation after a downtrend, and then boom, break up. Here it is. We could leg up again, right? So who knows? But this could be an interesting setup as well. Okay. So a lot of price targets. I think they're around that 250, 260 range. Oh, you go 230 at the moment, roughly on average. But some are targeting well above that. Okay, this is just the average. So it's Apple. Let's look at Amazon, right? So if you take a look at Amazon, the setup here looks really interesting, right? So Amazon's been leading higher highs and higher lows for a little while now, okay? Now, this honestly could still continue, right? And they're investing significant amount of capital into data centers in the US at the moment as well. So I think a lot of the monetary expenditure for domestic expansion in their data centers is already priced in, and they've got money to burn, right? So this could be a significant positive for the stock long term. And in the short term, I mean, if you take a look at it, it's one to really watch carefully, but it could outperform significantly as well. And you can see they have pulled back their earnings estimates, obviously, leading into the tariffs, and that's a good thing. So if they come out with a beat, it could rally, right? Another one which we'll take a quick look at is Google as well. Here we go. Higher highs, higher lows, beautiful structure. Again, it just looks too good to not be in as well. But this looks excellent potentially as well. Okay, so have a look at that. That could be a potential 15% just to the recent high, right? And again, if you look at their earnings estimates, they're pretty much in line almost. So I just think this could really outperform as well. Again, who knows? We'll have to see what happens. And another way to play this is maybe wait till the earnings result, get confirmation, and then buy. But at the same time, could be worth looking at before. So, I'd be very careful. You want to see what sentiment does. I'd be watching it leading into earnings and then taking a deeper look maybe a couple of days before. Okay. All right. So I'm going to just switch back again. All right. So guys should be able to see the presentation again. If you can just type a yes or a Y in the chat box, please, just to confirm. Lovely. Thank you. All right. Beautiful. So Bitcoin and Ethereum. This looks really interesting, actually. So there's a lot of misconception around Bitcoin, I think, from a lot of Aussie investors, right? But look, BTC is entering price discovery once again. So it's reclaimed highs and pushed well above them. It's broken out to the $120,000 per coin level. So I guess one of the main questions I've been asked anyway is what's driven this? So I thought I'd note it down here. Obviously, the surge has been driven by a lot of spot ETF inflows, institutional allocation, and weakening real yields as well. Bitcoin, it's been positioned by funds as digital gold at the moment in a hedge by a lot of institutional fund managers at the moment, especially out in the US. So the argument that it's just risk on now is sometimes, let's say, Not sometimes, but at the moment it doesn't look like it, because it is risk on, yet at the same time it's showing signs as a safe haven, because the rally we've seen in this has been significantly greater than gold as a safe haven asset, percentage wise anyway. So it's interesting. I mean, I don't know. I think this could really shift a lot of the goalposts as it relates to the way it's viewed as an asset. It's increasing adoption in asset allocation strategies globally. Inflation cooling, and potentially rate cuts ahead as well. So if you're looking at it as a risk on asset as well, in a rate cut reduction cycle, it could just continue to move, right? So liquidity is returning here to BTC, and it's actually not only returning, but it looks like a lot of it is there to potentially stay if it holds up, obviously, above the 110 level. And again, it's more of a scarcity sort of play, right? So, the limited supply would indicate that there's more value here as digital gold per se, right? As they say. But the next key levels to watch on Bitcoin are $140,000 to $150,000 per coin. That's the next psychological barrier that I think a lot of traders are eyeing out. But obviously, any clean break above 122 with volume could trigger another squeeze and a leg higher for BTC. Okay, and again, we can play this sector through equities. It doesn't have to be Bitcoin directly. So, I have mentioned that I like the look of MicroStrategy to many clients, to many investors out there. But at the same time, obviously, it's had a bit of a run. And there's other things we can look at. We can even look at that and pull back with something. But the point here is, this isn't advice to buy it. I'm just saying that there are many ways that we could get access to the cryptocurrency sector without buying a Bitcoin, right? And I think this is the way a lot of investors need to think, because if you do see cryptocurrency really being adopted long term, you need to have a strategy in place. And we can help you with that. Ethereum as well, right? Now, Ethereum, and just to give a bit of understanding on Ethereum as well, it's basically the infrastructure, right, for decentralized finance, AI tokens, and applications, and NFT settlements. So its network usage is growing fundamentally at the moment. And what we tend to see when we see Bitcoin rally is the outer flows of Bitcoin, once you see a bit of consolidation, move into Ethereum. So what you could see is a continuation. And some of the experts out there in Wall Street, like Tom Lee, he's projecting some insane numbers here for Ethereum's targets over the next quarter to the year coming. And it's really interesting because I do think it could really happen easily as well. So anyway, so the background understanding of Ethereum is that it is infrastructure for decentralized finance, AI applications and tokens, and NFT settlements, and a settlement process as well, and smart contracts. So as AI increases and expands, I think cryptocurrency may be a key integral role in artificial intelligence too. Okay. A lot of fund managers and Ethereum institutions have been investing in ETFs at the moment as well. So, historically, ETH has underperformed BTC, but it could be on the verge of leading the rotation out of BTC as well in the altcoin space, right? So basically, money could flow into Ethereum from BTC. Some key levels here are 3,600 to 3,800. A break above that could send Ethereum significantly higher towards 4,500, 5,000 quickly. This is US dollars, right? And the ETH to BTC ratio is bottoming. So historically, that precedes an Ethereum bull run as well. Okay, so I just wanted to mention that, wanted to give some understanding on that as well, right? So that investors sort of understand a little bit more about the fundamental nature of Ethereum, and I've sort of broken it down here. Sorry for the double up in slides there, but broken it up here in some catalysts and some breakdowns with the thesis and the technical targets as well. So Bitcoin, the thesis is institutional asset, inflationary hedge as well, and a risk on asset, potentially, however you want to look at it. Catalyst would be a spot ETF demand growth and Fed policy shift to rate cuts, which could shift a lot of assets higher, but obviously particularly BTC, because as the value as interest rates reduce, it reduces the value of the US dollar, which artificially uplifts the price of assets correlated to the US dollar as well. Next technical target would be 140 to 150. Ethereum, utility chain, and ETF tailwind again would be the thesis. Again, the catalyst would be spot Ethereum ETFs and Ethereum BTC rotation. And they're the levels for the break as well. Okay. So just thought I'd mention as well, we can discuss this at the end, but if you're interested in looking at, obviously working with me, I'd be happy to run you through that after the presentation today or the webinar. Years of experience through COVID, inflation, quantitative tightening cycles. I've managed multi-million-dollar worth of portfolios across cycles and in markets, proprietary strategies with real trade recommendations as well. You'll get trade alerts, macro research, and direct access to myself and advice. Private group of serious investors only. This is not for the general public. So basically, if you're serious about investing and being tactical, making money in the market, we should work together. Minimum investment, starting capital 100K, but would be the minimum, the bare minimum, I'd say, but 750 plus is ideal. So it ensures strategies can be effectively managed and deployed, obviously all with general advice. Okay. This is ideal for individuals, basically managing personal wealth, self-managed super funds, family trusts, or transitioning from passive strategies as well. Individual accounts are welcome in personal names, company names, everything, right? So happy to look at all of these setups as well. Okay, so you will get access to, again, weekly trade setups across equities, commodities. We'll provide strategies that can effectively be deployed across equities with high conviction macro setups as well. Model portfolios for income and trading strategies. Regular sessions with myself, direct questions and answers, ongoing email, SMS alerts, and high probability trades as well. Okay, so this isn't a subscription, it's a membership to work with me and Sharewise in improving your total returns from a general advice only perspective. We've got a limited intake as well for the month. So that way all investors get the same treatment in terms of quality and time. So let me know, the seats are sort of closing out at the moment, and this is your moment to get off the sidelines and get ready for earnings season. This is the time to make money. So, I love this market. It's an interesting one, and the sooner you come on board, the better, and there are limited spots. Okay, so just going to, there's been a couple of questions here, so I'm going to let you guys ask away any questions, but throughout the webinar, I have received a few that I'm going to address. And I think I've addressed a few of them in the session anyway, but I'll just be direct about this. And if you've got any questions, you're more than welcome to ask away. In the meantime, I'm going to also launch a poll, and you can answer those questions. And I'd love to potentially work with you. All right. So first question. Oh, sorry. Hold on. Let me just make sure this poll is running. Done. Okay, so the poll is running now. So one of the questions I was asked in the webinar and prior to the webinar from registrants was, What sectors are likely to outperform this earnings season? I think I've pretty much sort of touched on that, but tech and communications are leading the race in AI demand and margin expansion. So I think this could be one of the key areas to be focused on. Discretionary could surprise if consumer spending holds as well. And, financials remain, I would say, mixed too. We could get still a positive in financials. So I hope that answers that question. I've got a couple of others here as well. So should I buy before or after earnings reports? That's probably one of the most common questions, and I thought it'd be the most relevant to today's topic. So generally, post earnings is safer. Okay. You wait for volatility to settle and use 2-day confirmation. But for strong trends like Microsoft or Nvidia, buying ahead with tight stop losses could also work as well. But again, you really want to pick and choose how you do that. Okay. So if you want some assistance on that, again, we can help you. I can help you here on the advisory desk. Couple of others that were asked as well was, what's driving Bitcoin now, and how does earnings affect it? That's a really interesting question. I've never been asked that question before in terms of how does earnings affect it. But look, the answer to that is BTC is trading like a macro risk asset, right? So strong tech earnings and falling CPI support upside. Spot ETF flows are creating a floor, but it's still going to be volatile, obviously. I hope that answers the question. I think I've answered a lot of these, and here we go. So how do you manage risk trading earnings? Well, I guess defining risk, you reduce position size, you avoid oversized bets into reports, and use some, let's say, safe haven options through maybe even gold diversification as well, right? And stop losses, trailing stops to protect your profit if you are in the position before earnings as well. Okay. Lovely. Well, look, I think I'll end the poll there now. Thank you very much for attending, everyone. And again, if you do want to work with me, I'd be happy to discuss this with you. Basically after the webinar, and happy investing, happy trading. If there's any questions, if anybody does want to look at things with a bit more detail, just reach out. You got my details there on the screen. 0451 125578, j.ishac@sharewise.com.au. Thank you so much for your time. I hope that was a helpful session, and we'll see you on the trading floor. Thank you.